Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast presented in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. Today we're going to talk about a topic that is quickly becoming the hottest subject of debate amongst the financial community and how Canada is being affected. So the issue at hand is inflation, a topic that has been nearly forgotten about by many, but has recently raised some big red flags and can cause some serious damage if it gets out of hand. Since this topic is so big, I'm going to split the material into two separate episodes. In the first, we'll cover why inflation is spooking individuals right now and how inflation is even measured in Canada. During the next episode, we'll look at how inflation can affect you and how you can protect your finances from it. As always, a big thank you to those that have donated to us on Patreon. And if you don't know that we have a Patreon account, please consider checking it out. Your support is greatly appreciated. Also, the blog post for this page will include a whole bunch of links that will allow you to explore what's happening with inflation in Canada further. So inflation has been at historic lows for several decades, and many Canadians have pretty much just forgotten that it exists. It's been hovering around 1 to 2% since about 1992. So first of all, let's do a quick primer for any of you that may have forgotten what inflation is. Essentially, it's the rate of change in the value of money over a period of time. In other words, why prices usually increase over time, or why older generations also complain about how expensive goods and services are compared to when they were younger. Inflation is central to so many aspects of our life. The most obvious is how the goods and services that you buy become more expensive. Not so obviously is how it affects you in a slew of other ways. It's the benchmark that guides wages, it guides how much you're paid from a pension, and seriously affects your investment portfolio. The government also uses future inflation estimates to determine how benefit payments change over time. It also shapes how the tax brackets change, and much, much more. And it's also important to point out that you can look at what's happened in the past with inflation and what we expect future inflation to be. Past inflation is what is typically measured, while expected inflation is what we predict will happen in the future. Many economists argue that expected inflation is actually the most important of the two. So, how is it measured? The Canadian government and Bank of Canada keep a very, very close eye on inflation. The main one that is used to keep track of it is called the Consumer Price Index, also known as the CPI. The CPI measures how prices change across Canada by using a complex methodology that collects the prices of thousands of goods and services. This then gets boiled down into a single index that can be analyzed further if needed. Now, in this formula, a calculation is made that looks at the average proportion of goods and services that a household will consume. This is called a CPI basket. Doing this creates a more accurate measure of changing prices than if someone just used the average general prices of goods. Essentially, what they're trying to do is they're trying to mimic what a household consumes and then use that in their calculation. And this basket is then compared to similar versions in previous time periods to see how prices have changed. Analysts can also drill down into these numbers and see how inflation affects different areas of Canada or how certain goods or services have changed in costs. The Bank of Canada also analyzes the core inflation rate, which strips out the most volatile item categories to have a more steadier and consistent index. Doing this allows temporary irregularities like weather patterns that affect crops to be minimized. Now, the largest policy goal of the Bank of Canada is to keep inflation within a band of 1 to 3% with a goal of 2%. The Bank of Canada uses many methods to keep the inflation rate within this range, but the most common one that people fixate on is the policy rate, also known as the overnight lending rate. This rate is central to monetary policy and guides rates throughout our entire Canadian financial system. And right now, this policy rate is sitting at 0.25%. Now, going back to 1992, This is when the Bank of Canada changed their policy to focus on managing the inflation rates. Before that, inflation was all over the place and was especially bad in the 1970s. For example, in the period between 1973 and 1976, the average annual inflation rate was 9.2%. And after the Bank of Canada focused on the inflation rate, it has been very well tamed, so much that many of us don't even care about it. I give a lot of presentations, and when I talk about inflation, it's more of a footnote than, topic that people are really interested in. Now, this really brings us to what's happening right now. And all of a sudden, inflation is back on everyone's radar. Just recently, inflation numbers in Canada and in the United States have jumped. From April 2020 to April 2021, the most recent data, the Bank of Canada reported that inflation grew at a rate of 3.4%, and the American Fed reports an increase of 4.2% for that same time period. And markets responded with a lot of volatility, and also the type of investments that typically hedge against inflation also jumped up in value. Some of the more common ones include things like gold. And we'll be exploring the different type of ways that you can protect your finances in the next episode. Now, the big concern here is that all of the COVID-19 stimulus programs added a massive amount of money supply into the economy that will push up inflation. The official response by the Bank of Canada was that this increase is temporary and in response to the economic recovery that is currently occurring due to the COVID-19 health crisis. And if we dive further into the numbers, what we see is that when you strip out energy costs, the CPI only increased by about 1.6%, which is not too excessive compared to previous data periods. And to kind of show how much energy prices increased over this time period, we can look at the price of gas, which increased by about 62.5%, which the Bank of Canada reports as being the largest increase that they have on record. Some other interesting details that were pointed out in this research is that there was a decrease in the price of vegetables by about 7.2%, and this is due to an oversupply of tomatoes. There was also a 13% drop in cell phone plans, which is largely attributed to data promotions over the same time period. Now, other types of data seems to point towards this inflation continuing beyond just these numbers. One of the biggest indicators that shows this are future bond yields. And what these really show is that investors and markets think that these rates, or what's happening now, will be a more continued problem. Similar concerns about large stimulus spending was also raised after the Great Recession in 2008-2009. There was a lot of money that was spent into the economy, and a lot of economists and professionals at the time believed that all this money entering the economy through things like quantitative easing were going to create a lot of inflation. Now, the outcome of that was really not much. That perceived large amount of inflation that they anticipated to come out of that spending never really transpired. And this is where we are right now. We hope that these inflation numbers are just a temporary correction due to the health crisis that we're slowly coming out of, but it's not for certain. And what's important now is to really monitor this situation to see if it really turns into something else. And continued inflation can cause some serious damage to our investments and can shake up the whole financial environment. So that's it for today, but join us next time as we look at some ways that you can protect yourself from inflation and more. Thank you again for listening to Simple Money Podcast. As always, if you have any questions or comments, please contact me directly at info@ffcoach.ca. And if you're enjoying the show, please consider sharing with a friend or family member. Take care, be well, and talk to you soon.